welcome. It's Mary Ellen McGonigal, and you're watching the MEM Edge show. And welcome. We have a new time that we are going to be going forward, coming to you live, and that is at 5 p.m. Eastern Time. I want to say welcome, and please come back each and every week. What we are going to be doing is reviewing the action in the markets over the prior week with an eye toward helping you develop a plan going into the new week. So this is super exciting. I'm going to go ahead and share with you what we are going to be covering today. And the first item is we're going to take a review of the current markets. Where are we? Not only with the broader markets, we're going to drill down. We're seeing quite a bit in the way of sector and group rotation. Whether it's sustainable or not remains to be seen, but I'm going to show you what to be on the lookout for and how to uncover stocks among those newer groups to the table, if you will. So that is going to be covered. Also, we're going to show you, or I'm going to show you, how you can use Friday's action for high probable trades going into next week. And of course, that's going to have everything to do with the markets remaining in the currently bullish state that they're in. I'm going to review that further. But what I have found, I used to do this show on Monday mornings bright and early, and I found that when I, over the weekend, was doing my research, covering action on Friday, oftentimes there would be a continuation of that action going into, at the very least, into Monday. So we're going to look at some of the StockCharts.com preset rankings that can potentially get you in front of stocks on the move. And then from there, we actually do have we have more than a handful of reporting next week, but of those stocks that are still due to report their most recent quarterly earnings, there are a handful that stand out that I want you to be on the lookout for. These are stocks that are in hot groups, areas where other peers that have reported have gapped up. So we are going to go ahead and take a look at those stocks as well. Now, before we dig in, I wanted to alert you, MEM Investment Research, of course, is my firm, and I do have a 4-day window for individuals to purchase my primary course, and it's only open for 2 more days. This does not happen often. It's a 5-part course with lots of bonuses. Down here, I'm outlining what it's designed to help. I've gotten great testimonials and reviews, but it really is all about helping you uncover these big, powerful outperformers. And again, this is only offered about 4 times per year. We're right in that window right now. You can go to meminvestmentresearch.com and get more information there. I hope you take advantage. It's a great, very powerful course. Let's dig into today and what we are mentioned we were going to go ahead and cover. So this first view is a daily price chart of the S&P 500. And for those of you not familiar, I'll describe some of the overlays that I've positioned on top. So each bar here is 1 day of trading activity. So what I wanted to point out is the fact that the S&P yesterday, on that bullish news that Trump is going to be renewing the trade talks in October, that gapped up the markets yesterday. Take a look at that volume, very, very confirming. But the most important ingredient here is the fact that the S&P now has broken back above this red line, and that red line is your 50-day simple moving average. And we did have this breakdown in the beginning of August, tariff fear related, and the markets really bounced around for most of August. And with my work, there were pockets of strength that I was highlighting with my MEM Investment Research biweekly newsletter, but we were waiting for this index to break back above this red 50-day simple moving average so that we can get an all-in signal, so that investors could theoretically get more aggressive with their picks. So what we have then also in conjunction with that is an RSI, that's a relative strength indicator. You want that not only to be sloping upward, you want it to be up above that net neutral 50. So we do have that positive ingredient as well. And then down here, I have what's called a moving average convergence divergence. This is another momentum indicator. Two particular characteristics here. You want to see that black line breaking back up above the red. That is a bullish crossover. We did get that a couple of days ago, but then again, on yesterday's action, this moving average convergence divergence popped up into positive territory. So take a look. We have three characteristics that are signaling over the near term, we are now in a confirmed uptrend. So really quite exciting, because there are certainly areas of the market that you are going to want to be involved in. And I would argue, outside of that aggressive growth, hopefully we'll have time, but I do want to take you to some of those more defensive areas, because in addition to being defensive, I'm talking about staples, REITs, and even electric utility stocks. Even they are viewed as defensive, but we are in an historically low interest rate environment. So there's other reasons to pay attention to those defensive areas. But let's go ahead and take a look at the broader market indices. And what we are viewing here is what's called the candle glance view. So I've gone ahead and populated the candle glance. You can have up to 12 of these thumbnail views, and you can use this. We're going to take a look at this using ticker symbols later, but for right now, we have the NASDAQ and also some of the other larger universal, the Dow Jones Industrial, the S&P that we just viewed. And then we have some ETFs that are really critical currently in this environment. This SOXX is your semiconductor ETF. We also have a look at the yields and transports, but I'll dig in with this, because what I've done is then overlaid an RSI indicator. I want to see the relative strength and sorted that in descending order. So let's go ahead and update that. The perfect view here, because we're looking at it on the close today here on Friday. So strength to weakness, take a look. Semiconductors are up here in the forefront. They have been really picking up, but yesterday's news that reduced trade talk fears has really helped these semiconductors. They gapped up 3% yesterday, up another 0.25% today. So we're going to drill down and take a look at some of the names within semiconductors, so you could take advantage of this downtrend reversal. Of course, noting that it is going to be very sensitive to trade war talks. Then as we move in, we can see the S&P, the Dow, and then the NASDAQ. Again, this is in order of strength. But what I did want to point out to you is this really significant move into transports. This is the Dow Jones Transportation Index. There are subgroupings in here that are really picking up. This is quite bullish for the broader markets. It's indicating a need to have purchased goods transported. And again, a breakup above this red 50-day simple moving average. Quite bullish and constructive. What we want to see a continuation into these transports, and we can take a look at some of those names. Another area that is percolating this week, I would argue not quite ready for prime time, that is the U.S. oil fund, USO, but at least it is showing relative outperformance. This is actually the oil fund, so it's relating to the price of oil. And as oil prices rise, so too go those energy stocks. But it is good to see it entering into this forefront as far as the strength. So we can then from there drill down to some other subsectors. This is IGV. That is the software index. And hopefully I can get back to this, but I did want to blow this up because take a look at what a huge outperformer. This is tech software stocks, taking us back to January. Huge outperformers for most of the year. It did fall in line with the pullback in the broader markets here in May, but overall, huge outperformer. It's been showing quite a bit in the way of softness of late, and that is not what you want to see. You want to see those leadership areas continuing to lead as the markets trade higher. So keying in on this, there's a stock here that we're going to look at later that is due to report next week, and I'll share with you some of the dynamics to be on the lookout for. So here we are back at that candle glance view. I wanted to point out to you, IBB is a biotech ETF, and this is another area similar to oil and energy that's really been underperforming for quite some time, and it is continuing to be a relative underperformer. Ideally, we do want to see biotechs pick up a bit in here because these are riskier assets. A upward move into these riskier assets is implying a confidence in the markets, but we're not quite seeing that yet. Volatility dropping in line as the broader markets are improving. You will see the VIX, this is your volatility index, dropping, and we're now dropping below that 16 level, which for some people is quite critical. I would prefer to use 18 as the line in the sand, but we're down here at 15. So this is telling us that volatility is decreasing. That's a good thing. The last item that we have here is the yield on that 10-year treasury. Take a look at this because it got down here at 1.47. That is a low that takes us back at least 4+ years. But over the last 2 days, we are seeing a potential reversal. And now the 10-year yield is trading at about 1.6. And when we see a move into treasuries, out of treasuries, the yield goes higher, you will see groups respond. So that's going to be a little bit of the sector rotation that we're going to be taking a look at relative to a nice uptick here in the yields. So that is your overview as of the close today. We're going to take one other big broad picture view. This quite simply is the 11 sectors within the S&P 500. Same principle, RSI sorted in descending order. From my work, you want to be able to uncover where the strength is. This is going to be your playground in essence, because among those areas of strength, you are going to be able to capitalize on a continued expected strength, and then from there uncover candidates. So this first area, we are going to see that by and large, these are those defensive areas, higher yielding, up here in the forefront. Now this candle glance is looking over a 2-month period, so it's not taking into account certainly this week's action, but we can see this is real estate. These are those REIT stocks and consumer staples. Despite the uptick in the broader markets, take a look at how well they are holding up here. So utilities are trading off a little bit more, but I would argue they went up higher and faster. So this pullback is not concerning to me. I would argue that you could still stay with your holdings in these defensive areas if you have them, and potentially use this pullback to enter some of those stronger candidates. From there, we can see technology is up here in the forefront. This has everything to do with that pop that we saw in semiconductor stocks. And then take a look, communication services. It is a good thing when we see this particular sector moving up to the forefront, because there are a number of high growth candidates among. You're going to see a lot of internet related stocks, Google being certainly one of the better known names, but a nice uptick here in the communication services. Industrials, this is all about the transports and so on. As we get over here to the weaker areas, here is the Energy XLE ETF. We can just take a quick peek. Notice how it's trying to reverse this downtrend, but generally speaking, all of your longer term, this red is your 50-day, the blue is your 200-day. Your longer term view is very, very heavy. They're trending downward. Anytime any kind of downward reversal attempt has been met with resistance. Take a look here in June into July, hit the XLE, found very clear-cut resistance at this downward trending 200-day moving average as the index, and this is true with stocks as well. As they continue to decline, your resistance, upward resistance, gets lower and lower. So we are starting to make ground, if you will, up some ground, in the sense that this XLE has broken up above that 10-day simple moving average. Ideally, you will want to see a continuation, because the good news is we are getting RSI just now peaking into above 50. MACD had that positive crossover. We're not quite up above zero, but keep an eye out, because there are a lot of super depressed companies that are in energy, and a reversal of this downtrend could in fact be quite interesting. So from here, now we have a super good understanding of the broader markets, where the strength is, and where you may want to fish, if you will, for candidates for next week. Let's take all of this information and take it a step further. What I'm going to do from here is go ahead into this first initial page interface on StockCharts, StockChart.com. And from here, quite simply, we can then drill down into the sector summaries. So we talked about where the strength is or was for the week. And now you can potentially capitalize on that. Now I'm wondering, did I not get XLY in here? And I'm just going to take a minute because it is certainly worth it. XLY is the consumer discretionary, highly cut, a lot of retail stocks in here. And we can see, I apologize for not including this, but I'm glad we captured it, because consumer discretionary, as you may note before, it was just the defensive areas up here in the forefront. Take a look, consumer discretionary snuck right in here to number 2 on that relative strength basis. And it's all about two characteristics: a number of retailers coming in and apparel manufacturers coming in with strong earnings. That's one element. But also this big gap up is all about trade and tariffs. A number, particularly shoe companies, 80% of them source their goods from China, so they will be right in those crosshairs. So a lot of reasons to be near-term constructive on consumer discretionary. So let's go ahead back. I'm going to share with you, we're not going to go into each sector, but what I will do here is give you some very sound ways that you could potentially get in front of stocks that are on the move here. So consumer discretionary showing strength up there in the forefront. And then this is your weekly performance. And we can see some of these areas are really picking up. Being really tuned into the markets, I can tell you some of the names that are pushing these areas higher. But let's do, in fact, we can very easily start here with clothing and accessories, up 8%. And oftentimes what you'll see is a number of super big winners that are driving that. From here, what I do is take a look at the scooter, because quite simply, this is GIII, up 18%. This scooter is the StockCharts technical rating analysis number. The higher the number, the more technically sound that stock is. So when the scooter is super low, we have a 3, we have a 23. These are super depressed stocks that are really having these reactionary bounces, 8. So from my work, when I'm looking at these outperformers that could potentially have more room to go as far as the upside, I'm going to key in on those higher scooter ratings. I want to be, personally, from my work, I want to make sure that it has a high and a strong StockCharts technical rating. So let's go ahead and take a peek at Lululemon. From here, I'm going to go ahead and access the Sharp chart. And what we are looking at here is a daily view. Let's see if I can pull that out a little bit and you can get a bigger view. So take a look. This is Lululemon. We're looking at a daily price chart. There's two really bullish characteristics that are taking place here that I want you to take note of. One is the fact that the stock gapped up 8% today. Take a look at that huge volume telling you that institutions want in. And I'm going to show you historical precedent, because oftentimes this is another, so we also have the RSI and that MACD. So we have 3 characteristics. I'm going to point out a 4th characteristic to you, and that is the fact that this particular stock is breaking out of a 1-month base. Let me just take 1 second here and annotate this so I can share with you what I'm seeing. So this is what we call a base. When a stock attempts to hit a new high and it falters, and we are in a period right now, you're going to see an awful lot of stocks breaking out of bases, simply because this particular last 30 days, August, very tough period. A lot of stocks did just what Lululemon did. But more important relative to current action is the fact that on this gap up, the stock broke out of this base. In other words, it broke out to a new high, and that is in essence giving the stock more room to roam as far as the upside. So now we have 4, even 5 bullish characteristics that are telling us that Lulu is easily poised to trade higher. Let's go back here to the prior quarterly earnings. Very similar dynamics. We talked about the stock breaking out of a base on volume, very similar. take a look at this. This is that big volume uptick. And we can see that Lulu, now, of course, the broader markets really had a tough go in May, but it held in remarkably well and did eventually break out to new highs. So here to tell you that gap up is not the end of the move. Oftentimes you will see significant outperformance beyond that. I'm going to share with you another stock that recently is also in this retail space. I talked earlier about these companies coming out with big numbers. This is a bigger, more heavyweight stock. Take a look at Target. Similar phenom, gap up on earnings, huge volume, breaks out of the base, continues to advance. That's another 10% advance beyond this initial gap up. So well worth noting. So hopefully from that exercise, you are able to see how you can go into those pockets of strength that we identified, and then from there capture potential candidates. Now, for those of you that are more inclined to play these down and out moves, let's take a quick look. This is Tapestry, TPR. This is a company, they recently renamed themselves. They own a number of well-known brands. Kate Spade is one of them. Coach is another. So they are in the apparel, oh my goodness, well, we'll call it accessories. And this is TPR. And I'll tell you this, we can see it had this nice gap up on earnings. RSI, MACD is positive. MACD had the positive crossover, but it's not quite positive yet. I, as you could see, will definitely favor those stocks that are already in a confirmed uptrend. So with TPR, we can see your longer term trends are down with these 50, 200-day moving averages trending downward. So we've had these gaps up here on volume, interesting, but it could very well run into resistance here at 26. Now that's a 10% move for those of you that are inclined to play it, but not from my work. I do tend to favor those more technically sound stocks among these groups and areas that are picking up as far as interest. So that is another area that I mentioned that we would look at, but let's go back to StockCharts.com and that first page here. And I talked about really over time, I did do this MEM Edge show on Monday mornings. So as, again, part of that exercise, I would take a look on Fridays and see what particular stocks, because knowing not just the stocks from here, you can then garner information as far as potential group movement. And let's go ahead. This is NYSE. I'm going to go ahead and take us to today's action on the S&P 500 and taking a look at which stocks were up the most today, and bearing in mind that the S&P 500 was flat on the day. So these are really outperformers beyond what the broader markets did. And when you do this, you're looking at market movers again at the close. I'm going to go ahead and access that candle glance because I want to see among those 10 stocks that were on the move today, are there any potential candidates, anything that looks somewhat interesting? And I do see two stocks that look interesting to me, PRGO, MSCI. Now, quite simply, this is Kraft KHC. You can see it's trying to turn, but it's still below a downward trending 50. These are some of the characteristics. TPR, big mover today, down and out, still has work to do technically. But let's go ahead, because Raytheon could be really quite interesting as well. We have a triple bottom here, and the stock is poised to break out of the space. So we have three, from my work, potential candidates that bear closer examination to, because again, oftentimes on Monday, you'll see stocks from that list on Friday continue to hit that big movers list that we were just looking at. So here is that first potential candidate, PRGO, and this is a generic drug stock. And I will tell you, generic and drug stocks in general have really been struggling. The stock does provide a 1.7% yield, so you do have a little bit of a yield. But what caught my attention is the fact the stock broke above that 50-day simple moving average. Now, closer examination, we can see the RSI is trending upward, as well as the MACD having that crossover, not quite positive yet. So we could be on the move as far as reversing this downtrend. So you're going to want to drill down. I can tell you it's not earnings related, but there could be other news out. Let's take a look. We talked about Raytheon being somewhat compelling looking, and sure enough, upon closer examination, this is that triple bottom that we talked about, where the stock finds consistent support at that 175 level. We are poised to break out of that longer term base. The only thing for my work that really would not get me interested in this, and this is the kind of intel that you can get with my MEM Investment Research biweekly newsletter, is the fact that aerospace defense stocks have been on a tear, really outperforming the broader markets. We have had our clients in a lot of big outperformers, but this stock has not been participating. So it's not going to be as interesting to me. Clearly, there are troubles with the stock, even though it had that interesting big move today. So let's go back to this one other potential candidate. This is MSCI, and you can see today's action today. It's up about 2.5%, pushing the stock out of this flat base. And this is a financial services specialty stock, and we can see it fell out of bed in line with a number of stocks in August. But what interests me is the fact that it really overcame and had a good second half in August, despite a very difficult period in the broader markets. If we pull up a weekly, you'll see, well, before we do that, RSI is positive as well as the MACD. Let's go ahead and take a look at this weekly, and you'll see that it is emerging out of an oversold position. So I would take a closer look at that stock. And also you can do that same exercise for the Dow as well as the NASDAQ. So let's go ahead and take a look at some companies. We are running a bit out of time here, and I didn't want to skip looking at stocks that are due to report next week. This is Restoration Hardware, RH, in that consumer discretionary space. It has been outperforming going into earnings, but that has everything to do with this prior quarterly report. Gap up, management guiding higher, finding support at this upward trending 10-day simple moving average. Keep your eye out on this stock because analysts are raising estimates going into their Tuesday earnings report. The company came out, said they will not be impacted by the tariff. They don't see any near-term impact. So that is a bullish consideration. And then another company that is due to report on Thursday, this is Broadcom. And this is in that semiconductor area. I talked to you about how semis, this is in line with that gap up. So we are going to want to keep an eye on this. Broadcom is a bellwether name among semis. So again, on Thursday, analysts are revising estimates going into earnings, which is quite bullish. One last name that we can take a look at that is due to report is in the computer software space. This is ZS. These guys are all about computer security, and take a look at just how significantly a downdraft it's had, finding support at this 200, but it does have a history of surprising to the upside. This is their last quarterly report, significantly higher from there. We're going to want to look at HACK because this is the ETF for cybersecurity stocks, and we can see that we've had a gap up here, and it is potentially breaking free of this malaise that it's had since August. One last area and item that you're going to want to do is look at other stocks, other peers with ZS that's due to report next week. And this is Palo Alto, another cybersecurity. They reported yesterday and gapped up on really strong numbers. So lots of positive. I do not trade stocks going into earnings, but you certainly can see a lot of potential here because the stock has pulled that back so significantly. Any kind of positive report similar to this prior quarter would in fact be quite bullish, and that is something to consider. Again, I urge you to go to meminvestmentresearch.com. Take a look at that course that I'm offering, only open for 2 more days. You will want to take advantage so you can get in front of these big winning stocks. I'm going to leave it at that. Everyone have a great weekend, and we'll see you next week.